My name is Ron Heeks. I'm Managing Director of Larvotto Resources, ASX listed company in Australia, and we are bringing on Australia's largest antimony mine that also has high-grade gold.
Ron, good to see you. So we saw you about just over a year ago. Obviously, things have gone great for you. Share price is telling me that. Might be worth just starting for people who need us to remind us how you picked this thing up.
Yeah, sure, Matthew. We came to the project 2 years ago now. It was in administration from a company that was putting it into production, and unfortunately they had a catastrophic failure at another one of their operations. Ended up in all sorts of financial issues due to that. This operation became part of that, so we picked up the pieces from the administrators and moved the project forward, largely to do what they were doing, but increasing the capacity of the plant, making it better suited for the mine, lowering unit costs, and we've put a lot of effort into metallurgy.
Right, and obviously you get also the beneficiary of about 150 million bucks worth of spend by them, which kind of helps with the balance sheet today. So at the time you had a PFS, you've moved it through DFS, and then when we're into kind of build phase, and we're going to talk about that in a second. Can you remind us about what the DFS broadly tells us?
Yeah, the DFS expanded on what we had, which was a 250,000 tonne per annum plant. We're taking that to 500,000 to lower costs, and it's better suited for the size of the ore body as well. That's about a 70 million Aussie build on that. We've got about $50 million worth of underground development. We've got 15 kilometres of underground development there already, but we've got to tidy that up, and about a year's worth of production pretty well ready to go. And the rest of it is tidying up the site and building the team. So about $150 million job to do that. The DFS we put out about 14,000 tonnes of antimony concentrate, which is about 5,000 tonnes of antimony metal, 14,000 tonnes or so of gold concentrate at about 50 grams per tonne, and gold bars, because about 10% of our, somewhere between 10 and 40% of our gold, depending on where you are in the ore body, reports as free gold.
Right, okay, so 150 million bucks, you will have needed to put the money together for that, and from what I read, that wasn't so hard.
There was a lot of effort that went into it to get it there, but yeah, we raised 100 US in a bond. A lot of people ask, why did we do a bond? There hasn't been a bond done in Australia for more than a few years. Why? Because we could. A lot of projects just aren't able to do that. The story was good enough. The cash flows out of it was good enough. It's a very, very simple mechanism. It was very, very professionally done. We enjoyed working with the people, and the flexibility was there to do it the way you wanted, rather than financiers saying you've got to do it like this and this is how it is. It was more modeled to how we were going to work, and then on top of that we did a $60 million capital raise via the ASX. So that cashed us up to a point further than what we need, but it's always good to have some in the bank. It's tough times building things on budget these days, so we did allow for a bit more, and we've also got some other projects that we're working on as well.
Well, and just, I mean, to that end, obviously, like, gold's gone on an absolute tear at the moment. Was it 6,000 Aussie at the moment? Something like that?
As we're speaking, 6,000 Aussie, yeah.
Right, but antimony says, hold my beer. That seems to be the commodity of the moment, certainly in the North American markets. Was that part of the reason why the money was so accessible to you?
Oh, absolutely. Antimony was sitting up around 60,000 a tonne at the time. That's pulled back a little bit, but it's still 20,000 more than what was in our feasibility study. So we're very conservative on gold and very conservative on antimony. But yes, antimony, critical metal, most critical of the criticals, used in armaments, used in solar panels, fire retardants. It's become the metal that everybody wants. China banned export of antimony. The US doesn't mine or produce any of any significance at all. So there was immediate deficits around the world what is the most critical of the critical minerals.
Absolutely. I think the DoD or DOW is in a Department of War in the US is investing into at equity level in the very few antimony potential producers in North America at the moment. Well, let's get on to the important bit, which is obviously the build out. So in terms of the engineering design, I guess the execution model is what I'm interested in. How is the build being managed?
We're using Maca Interquip Mintrex, which is part of the TIS group. The operator there I've worked with before in his previous company. He's one of the best small plant operators, builders in the world as far as I'm concerned. It's a perfect fit for us, size of the company and what we're trying to do. You don't want too big a company, you don't want too big a smaller company. The build team is on site now. They did all the engineering with a huge amount of experience. We tied that in with 12 months of really intensive metallurgy. But of course the plant has done all this before. It's produced antimony concentrate before, it's produced gold concentrate, and it's produced gold before. So we're not doing anything new here, but we have put a few more smarts into the plant. We've put a secondary crusher in, we've put fine grinding mills in, we've put a couple more Nelson concentrators in to pull out. So we've put a lot more knobs and dials and everything else in to really extract as much of the metal as we can. At these current prices, every percent that you get more is a huge amount of money. So it wasn't as a concern before, but you don't want that to get away. So we've put a huge amount of effort into the engineering there, and the build's underway now.
And I mean, how much of the 150 million legacy infrastructure have you been able to kind of keep? Because obviously you've been, I guess, value engineering all of the above.
A vast amount,
Yeah.
really. Putting in the secondary crusher, that was actually already on site. It was brand new, just hadn't been installed when the previous operator went into administration. So we've got some wins there. The replacement value of that, we say it's 150 million, but really it would cost you 300 million to put all that infrastructure in. There's site offices there, there's all the roads, there's the works, we're on mains power. There's an incredible amount of work that's gone into it. We're spending 70 expanding it, and we're probably only touching 30% of it, so the rest of it's already there. So it would have been a plus $300 million build easily to get to where we are, plus 15 kilometres of underground development, which is $6,000-7,000 a metre to put in place, and would take 2 years. So when you add it all up, the value benefit that we got and turning it into an 8-month build time and immediately go underground, you really can't put a number on that, especially in the current environment.
Yeah, I mean, and things like just continuing on the engineering design component, things like dry stack tailings systems, and even underground rehab, etc. I mean, how have you approached those?
The rehab and development will be done by contractors, but the actual ore mining will be our staff. So it's a high grade, narrower ore body. Certainly it's a little bit trickier than some. So we want to be able to manage that and have our team doing that. You don't want to be paying a tons bonus when you're more worried about grade. So we're doing the long hole drilling and the blasting, and we have a development crew, which is an external contractor of well known in Australia. We haven't strictly signed a contract yet, so I won't say their name, but they understand where we're working and the environment we're working in, so that's great. So many synergies going on for where we are. It's just hard to explain the benefits that we get when you're 20 minutes from a major regional centre that has some of the best private schools in Australia and a university. We've got a bitumen road to site, the airport's there, the infrastructure's already there. If we have more people coming during the build, we don't have to have a camp capable of holding everybody because we can put them in town. The benefits are just quite incredible, and the savings are quite incredible. All of our workforce so far are based in the town, which is just absolutely wonderful, and it has really been a huge win for us. So you don't need 2 people for every job as you do in a FIFO operation. So you've got savings there, but you've also got a workforce that are living and working in a beautiful part of the world. Armidale, that we're out of, was in the paper the other day. It's the 3rd most livable town in Australia. So it's a very nice spot to be. And if you're in the industry, there's not too many places where you can do what you love doing and go home at night.
FIFO, fly in, fly out. Okay. With regards to kind of critical path and I guess long lead procurement, can you sort of talk us through how you're kind of phasing everything in?
Yeah, we ordered all the long lead time items basically as soon as we'd finished the DFS. We had the money to do that, so we locked those in. Critical items and long lead time items are the biggest concern with meeting a timeline these days, so we locked that away straight away. They still control the build, but the build will be finished at the end of Q2 and commissioning to start immediately in Q3 next year. So we're on track to be producing at the end of Q2. It's a 4-month commissioning. I don't believe it'll take anywhere near that length of time to bring the plant on, because it's done it all before. It's doing more tons, but it's not really doing anything different. So we'll be full production mid-year.
Okay, and you talk about obviously roads and infrastructure, etc., and things like power and electrical systems. I mean, what have you designed in, and maybe talk to specifically kind of redundancy and expansion?
That's all existing, and we're on mains power. We're only a short distance from the main power line that runs from Victoria to Queensland and through New South Wales. So that's literally just up the road. We're in the middle of a major solar industry area, which feeds solar power into New South Wales grid. So arguably with solar power, we've got don't know how many thousand hectares of solar panels directly across the road from where we are. So very, very lucky there that infrastructure was all existing. We're not running diesel gensets and things like that. So the synergies and the benefits that they've got from being where we are far outweigh the challenges of being near a regional centre. Sometimes that can be challenging.
And things like, I guess, the costly things, you talk about roads being there, but are there any layout upgrades in terms of haul roads or stockpile pads or concentrate loadout or anything like that?
Not so much for us.
Yeah.
The biggest thing, they were already there because the plant's operated before. The underground operation where we start we'll be producing at exactly the same rate that it's produced at before. We're putting in another heading on the other side of the plant for the remaining tons. The biggest difference that we're doing here is putting in a dry stack tailings facility. Previously it was all wet tails. Where we are, it's challenging topography. It's near a town. Dry stack tails makes a huge amount of sense. You can rehabilitate it as you go. Therefore, your upfront bonding with the government is a lot less, because the liability is a lot less. With the wet tails dam, you can't rehabilitate it until you've finished the last day of operations. Dry stack, you rehabilitate it, you turn it into a landform. It'll have trees and grass on it within 12 months as you work, and because of the rainfall we get, which is why it's one of the most popular farming areas in Australia, it's not the middle of Western Australia, things grow. So you can rehab things as you go. And when you're working with the local community as we are, that's very important.
So obviously a lot going on here. In terms of how do you go about tracking cost performance across the build? How do you...
Look, our CFO and his team have done all of this before. We have very rigorous cost estimates coming through and cost tracking. In fact, I just received a report literally just before this of where we are and how that fits together. So yeah, very good team. The site team are very good, and of course the contractors are also very, very rigorous on what they track of costs. One, because they invoices, but a lot of what we're doing is fixed price building as well. So they can't exceed the numbers that they've quoted.
Right. Okay. And I guess what's interesting in these things when companies report is in terms of commissioning schedule. You talk about with end date, mechanical completion, cold commissioning, hot commissioning, etc. But that ramp up to nameplate capacity, what does that look like?
I think it'll be pretty short. I mean, you can't run these plants at half production. You've got to run them at full capacity. But during commissioning, you'll run at full capacity, identify that there's a problem, stop, run at full capacity and stop, and fix things that need to be fixed. Most of the plant is doing what it's already done before. The new bits going in, their pumps and their conveyors, there's not too much that can really go wrong, but we have allowed, I believe, a considerably longer period of time to get the operation going than what's required, given that it's done before.
Right, and is that the kind of period where you kind of I guess, identify or finalise on the kind of the feed blending between Eleanor and Golden Gate? Just in terms of I'm thinking about the met wet recovery, etc., and how you kind of finesse that.
The met work is it's challenging, and that's why we're putting a spectacular amount of effort into understanding mineralogy. We've put our own laser ablation scanner in, which is sort of unique in the industry to really understand metallurgy. And the ore body changes along strike. It's quite unique. If we want more antimony, you go higher up in the zone. The closer you get to the surface, the higher grade antimony you get. That's how these ore bodies go. The deeper down you go, you tend to get more gold, and you get more free gold. And if you've got the current mix where we are of gold and antimony, because we're about 500 metres from the surface at the decline level now, you get a good mix of gold and antimony. And we're mining at about 6.6 grams per tonne equivalent on our DFS numbers. If you run the equivalent calculation at current spot, it's considerably higher than 6.5 grams per tonne. So yes, the metallurgy does change. We put a huge amount of effort into feeding information back to the processing guys so that they can know what's coming. But again, the plant's done this. It produced antimony for 30 years, not this particular plant, but the ore body has. So it's all been done before. We're just really tweaking it and refining it to get as much recovery as we possibly can. The focus previously was more on grade, but at these prices, you were happy to pay a little bit of a penalty for a lower grade if you get a lot more.
Right. So you talk about maybe it's sort of tweaking what's gone before, but were there some learnings along the way? Because operationally they were doing okay, but things like risk management for like geotechnical or groundwater risk or any of that kind of environmental compliance, they were kind of set the path for you, haven't they?
Yeah, there's a huge amount of information there. Geotechnically, it's a very good ore body. It's quite a dry ore body. Arguably, we'd like it to be a little bit wetter for some of the processing requirements, but we do get a lot of back from the dry stack tails as well. We're not doing anything new. We're doing it a little bit slicker. And we're doing it a little bit faster and more tons and a bigger plant. But fundamentally, we're not doing anything new.
Okay. So, I mean, as an investor, I'm going to work out what I'm buying into. I'm buying into something which is going to get built, and there'll be revenue and margins created here. Is it a case of, well, then so what? So what do you do with your money? Do you go again, or just is it a case of organic growth from what you have in front of you?
All of the above, I think. The mineral field is huge in comparison to what's there at the moment, and some of the drill results that we're putting out are starting to show that. The geophysics are showing that these ore bodies extend a lot further. They were initially attacked for many, many years a lot deeper down, and that was because for the first few hundred metres, you've got higher grade antimony. That made getting the gold out through conventional methods very difficult, made it nearly impossible for the old timers. So they went in deeper down where they were getting a higher grade gold. With antimony at record prices, we can start from the top where the old guys weren't interested at our Bakers Creek deposit shows some of the incredible numbers that you get near surface that the old timers and even up until recently weren't interested in. And also they had the wrong plant. We've got a plant that will take the produce a gold and an antimony concentrate as made for the ore body. So we have a huge amount of upside to the project area, and we've gone with an initial 7-year mine life so that we could get the project funded and get it going. But it's easily a 20+ year operation, easily.
Right. Okay. And then what's the sort of, if you don't mind, just tell me a little bit of what the mood is in Australia at the moment. Obviously, everyone's super excited about what gold is doing. Maybe still yet to work out how the antimony market pricing works, etc. But for companies like you, do they look at you as some kind of takeover target? Do they expect you to be looking at, I guess, driving the gold component of the story? What's the feedback you got when you do these raises?
Because we're a smaller operation, so is a big company going to take us over? Arguably not. Is somebody smaller than us going to be able to take us over? Arguably not, because our market cap is now such that that's probably a bit challenging. Is there consolidation amongst others available? Absolutely. Are we focused on any of that at the moment? No, not at all. We are 100% focused on getting the plant producing so that we can justify what we've said we were going to do. The plant, it's going to produce it's very simplistically, 40,000 ounces of gold at about 8,500, 9,000 Aussie per ounce. So when people talk about an all-in sustaining cost on their project, and people say, our all-in sustaining cost is 1,500 or 1,800, we are minus 2,000. So it's quite incredible. So we're basically on an equivalent basis about 140,000 ounce per annum producer with a cost base of a 500,000 tonne per annum plant.
Well, there we go. That's attractive. That's right. And so, just on the antimony, I think last time we talked, you had an offtake at Wogan Resources, was it?
Correct.
Yeah. Okay, that's still there. Yeah.
Absolutely. Yes.
Yeah.
Yes. Had a big conversation with the chaps over the weekend. UK-based fund, largest antimony traders around. The more we get to know about antimony, the more we realise that was the smartest thing that we've ever done. It's a unique market. You have to understand it, and that's what they do. So the synergies there are huge. It was important to get an offtake away because people don't understand antimony and antimony pricing and all that sort of stuff, which is why we talk gold equivalent, because people don't understand it. And we do mine in gold equivalent. It's not just a number that we make up. We actually, all our block modelling and everything is done in equivalent numbers. But no, doing the deal with Wogan was wonderful. It's based on Rotterdam pricing. It's a mine gate, so we get paid as it drives out the gate. We don't have to worry about the logistics, and we can just focus on what we do, which is dig holes and processing.
Right, and obviously, I think, what do you think you got to get this build done, and you got to focus 100% on that, and that makes total sense. As a kind of 40,000 ounce producer, the market's going to want you to kind of grow that dramatically. One suspects, despite the high margins, they've got expectation in terms of ounces to be deliverable. But in terms of that kind of growth component of gold only, you think that can come organically, and you're saying maybe you can look around at other kind of producers. Have you got a kind of timeline for that? Because you've experienced this huge dramatic growth in the last year, huge. And then people will be expecting you to go again, and you've got to maybe have a plan for that. And so when do you think you'll be in position to start talking about giving guidance as to how and where that's going to come from?
I think early mid next year we'll get onto that. We're building the team. I sit here in an office that 2 years ago we had 5 people in this office. We've now got 22, and we've got about 40 people out on site, and we'll be at 300, very shortly. That's taking all of our focus, and quite rightly. It's very easy to think, oh yeah, it's all going very well, let's go and do the next thing, and lose focus on the primary thing that you've got. So we'll get this producing, we'll get it tick the boxes, and then look around at what we can do. It's 40,000 ounces of gold. That doesn't sound huge, but as I say, with 5,000 tonnes of antimony put on top of that, it's about 140,000 ounce producer. Now, to run at that for a couple of years with the margins that we're talking about, it's pretty special. But if we are doing what we're saying we're going to do, I think you'll find that we'll be pretty aggressive in talking to other people, because we'll be quite cashed up. We've also got a very good copper project out of Mount Isa that we listed on. We've got 1,000 square kilometres of ground around Mount Isa. We've got drill rigs on that as we speak. We're 40 kilometres from the Glencore mill at Mount Isa. Copper is my favourite metal. So, and I think we're going to see copper move, particularly as the war in Ukraine peters off a bit. I think you'll see copper really start to move. So we're very active up in that area, and if we're going to have a next operation, it makes a lot of sense that that's where it comes from. We've also got a very interesting rare earth project with some of the highest rare earth grades in Australia that the guys will be out and drilling in about 6 weeks from now. So there's a couple of other things bubbling along in the background, but the focus is get this done and prove to people that it can. We're doing a bit of the Lassonde curve thing at the moment. You're in build, people get a bit bored with the whole thing, the blue skies fading away, even though we're putting out some pretty spectacular results. But most builds go on for 2 years. We're talking about 8 months.